Did you know that 90% of Forex traders lose money? Yep. It's a brutal truth, but you don't have to be part of that statistic. In this video, I'll show you why most traders fail and how you can avoid the same mistakes. Reason 1: lack of knowledge. Let's start with the biggest one: lack of knowledge. Many beginners jump into trading without understanding the basics. Terms like pips, margin, or leverage confuse them. They watch one video, open an account, and start risking real money. That's a recipe for disaster. Reason 2: overleveraging. Next is overleveraging. That's using borrowed money to trade bigger positions than your account can handle. It sounds exciting, but it's dangerous. One wrong move, and your entire account can be wiped out in seconds. Reason 3: trading with emotions. Fear, greed, revenge. These emotions can wreck your judgment. One bad trade turns into chasing losses, or you get greedy after a win and overtrade. Successful traders, they follow a plan. No emotions, just discipline. Reason 4: no risk management. Here's a big one: no risk management. If you're risking 50% of your account on one trade, you're not trading, you're gambling. Real traders risk small, 1 to 2% max per trade. That way, one loss won't destroy your account. So, how can you avoid being in the 90%? Learn the basics. Start small. Control your emotions. Always use risk management. Trading isn't about getting rich overnight. It's about staying in the game. If you want to dive deeper into trading, check out my free trading plan, trading journal, psychology guide, and leverage cheat sheet linked in the description. It's packed with tips to help you trade smarter, not harder. If this helped you, give it a like, and don't forget to subscribe for more simple Forex tips. Stay smart, stay safe, and happy trading.